You are listening to chartingwealth.com for Thursday, the 15th of March, 2018. We see the S&P 500 down about 0.5% for the day. The Q's barely down 0.02%. We see bonds going up 0.88% and gold down a little bit at 0.06%. Let's jump in to the S&P 500 on the weekly chart as we always start things off. Of course, the two-day chart is heading up. The weekly is still down and, in fact, has tweaked over on the price percent oscillator, which is our main indicator. It's actually tweaked over down a little bit more. Derivative oscillator continuing to lose downward momentum. But as we look at the weekly chart, we can, of course, see that the last 2 weeks, and again, we're only 3 days into this latest week, so we've got 2 more candles before the weekly chart is complete, but we do see that it does appear to be an up week as far as the Heikin Ashi candlesticks. Remember, that stands for average pace in Japanese. It does appear to be up, but again, the price percent oscillator heading down, so we still have that weight of downward energy and momentum in the market. We look at the 2-day chart. It crossed over back on the 9th of March and was up for 4 days. And of course, this latest candle that's forming right now is a red spinning top. That will not be complete until the end of the day on Thursday. Then we'll know exactly where that is. It is not penetrated, but is very close to the 2-day price percent oscillator. The 2-day trend line. We see the price percent oscillator is flat. Derivative oscillator is pretty flat also. So we'll continue to keep our eye on things and see if indeed the S&P is going to roll over. When we look at TLT, the 20-year bonds, that tells us a little bit, and we'll just sort of jump out of the ordinary here, because what we see on the 2-day chart on the 20-year bonds, of course, is a lot of upward momentum. Typically, remember how we talk about this and think about bonds. Bonds tend to be a safe haven. When the market's going down, bonds go up. Well, bonds are going up, and the market looks like it could be drifting down. So we'll continue to watch. What do we see on the 4-hour chart? We see that 4-hour chart peaked out back in the morning on Tuesday the 13th. And for the last 3 candles, pretty strong down movement as far as the Heikin Ashi candlesticks go, getting close to crossing over, going down. Now remember, even if that does happen on the 4-hour chart, 2-day chart is still up. So again, that prevents us under our standard trading rules from moving in that direction. However, all things being equal, the market does tend to move in the direction of the largest chart, which is the weekly, but that 2-day chart typically pulls the market around prior to the weekly chart crossing over in the same direction. So, interesting dilemma. It will be solved for us. We'll continue to watch. And again, remember, we are trend followers. We don't simply do things because we feel like it. We wait for the trend to be established, and once we have both the medium term, the 2-day, and the weekly moving in the same direction, have a pullback on that 4-hour chart, and then it moves back in the same direction as the other 2 charts. That's typically the safest and best jumping in point, but for our weekly vertical crossovers. So we see the derivative oscillator losing energy, price percent oscillator getting close to crossing over on that 4-hour chart. And of course, what's the latest chart where we had a weekly vertical crossover? That, of course, was on the Qs. That is the NASDAQ 100, the tech stocks. And of course, that weekly vertical crossover going up happened back on the 9th on the weekly chart. And of course, we're now going into the 4th week of up movement on that weekly chart. We have a nice sizable candle. As we said, the Qs was down just a little bit for the day. On Wednesday, we see the derivative oscillator losing momentum. Price percent oscillator is moving up a little bit, mostly sideways. So we will continue to keep our eye on things and again, let these charts lead us. As we go to the 2-day chart, what do we see? Well, of course, the 2-day chart crossed over going up back on the 7th, and we see on that chart we had 3 nice 2-day candles moving up. The latest 2-day candle that we are looking at does appear to be weakening. It's just the first day of this latest 2-day candle. So again, we are not in a situation yet to say that candle's drawn and for it to lead us in any specific direction. We do see that things have flattened off on the price percent, on the derivative oscillator, price percent oscillator, still heading up a little bit. On this 4-hour chart, what do we see? Well, of course, it now, after having moved up strongly, has started moving over. It started with the weakness in the morning on Tuesday the 13th. We saw a weak afternoon, a weak morning and afternoon on Wednesday. The derivative oscillator has switched over to the negative price percent oscillator too. Now, price movement still above the 2-day trend line and, of course, well above the weekly trend. Well, it's still above the 2-day trend line. We haven't actually drawn a weekly trend line at this point. But again, we'll continue to keep an eye on things. If the markets move down strongly and start penetrating the 2-day trend line, then of course we would have some real warning bells going off. But again, as we look at the weekly, not super strong, but the candle is looking decent and the price percent oscillator is up. And of course, that 4-hour chart is where we're seeing the weakness. On the 2-day chart, we're still seeing it move up. And again, just keep your eye on penetrations of the 2-day trend line. That's where we are on the cues. We're cautiously optimistic. But of course, if we do see things going negative, that is things rolling over and moving down strongly, we'll pull the plug on that entry point where we jumped in Monday, right after 10:30, where we had the opportunity with that weekly vertical crossover to enter into a practice trade. Remember, practice trades, we are not a stock calling service. We don't get paid to do that, and we sure don't expect anyone to be taking anything that we talk about on this program as trading advice. We don't hold ourselves out in that capacity. That is always a warning that we give continually. We want you to practice with us, get good. Then once you get good, and you can make trade after trade after trade, then at some point you can make up your own mind as to what you want to do with your money. But we are not providing that information or service. Now, what do we see going on in the 20-year bonds? Well, it looks like bonds have pretty much bottomed out and flushed out. That's what it's looking like. We don't have confirmation yet because we don't have a crossover going up on the price percent oscillator. Derivative oscillator is losing energy. We said bonds up for the day, 0.88%. That 2-day chart, we can see a real boom on the first day of this latest 2-day candle. And of course, things had been sliding sideways for many days. And now things do appear to be booming up. Price percent oscillator heading up strongly. Derivative oscillator, of course, has been in the green for a while. And on that 4-hour chart, we can again continue to see strong movement up as the price percent oscillator and derivative oscillator heading up strongly. So again, maybe we're seeing a bit of a bottom in the bonds, and maybe that's going to mean that stocks are rolling over if money is coming into bonds, driving those prices up. We'll continue to keep our eye on things. What do we see going on gold? Well, we look at that weekly chart in gold. It does appear that it is crossing over this week. Week's not out yet, but looks like that might be happening. We, of course, see a penetration in the weekly trend line with this latest candle. Again, not a strong down candle, but it is down. Price percent oscillator crossed over going down. Derivative oscillator going down. What do we see on the 2-day chart? Well, of course, we see continued down movement. It crossed over going down way back on the 7th and then was sort of up and sideways. What do we see happening there? Price percent oscillator still negative. Derivative oscillators losing downward momentum. And so far, the latest 2-day candle, again, negative for the day, but the Heikin Ashi average pace candlestick, which is, of course, it is calculated differently. Great training there at the website and at our YouTube channel. 66,000 people have taken it on Heikin Ashi candlesticks. Encourage you to take it too. Green spinning top means lots of indecision tending up. But as we delve a little deeper, you can see that there was down movement in the morning, a bit of a recovery in the afternoon regarding the Heikin Ashi candlesticks and the price percent oscillator heading up and the derivative oscillator. So again, we'll wait and see what actually happens with gold at the end of the week. Folks, that's where we are as we end the day on Wednesday, go into Thursday, the 15th of March, hitting that midway point in the month. Thank you so much for being with us. You have questions, problems, concerns, please let us hear from you. We're continuing to watch that trade on the NASDAQ 100 and see if indeed the NASDAQ 100 will continue up. We did have that force to reckon with. That is the weekly vertical crossover going up this last Friday. That typically portends strong up movement over a period of several weeks. We'll see. God bless, my friends. All the best from the entire team here at Charting Wealth World Headquarters.